So we need to start first with the big picture about where we are located and how this China influence has been like the reason of. First of all, we have this domestic overcapacity in Asia where there's like an excess of manufacturing that forces the producers to seek overseas markets to sustain their operations. Why is that? Because currently China from 2024 to 2025, they had a GDP growth of 5%, which in the surface looks good, but in reality, it masks a deep structural fragility. Also, besides that, that is complemented with governmental subsidies. So Chinese companies have a full 13% VAT export rebate on film, label stock, and finished labels. Complementary with that, we see in the Western consolidation that we have seen mergers and plant closures in Europe and North America, which, as a consequence, makes a shift in reliance toward Asian supply. So we have these four elements as a big picture. Now, let's go deep dive in the numbers of USA. So here in this chart, we are watching the total imports of paper pressure sensitive labels into the USA. As a quick note, these pressure sensitive labels refer to unprinted paper, paperboard, pressure sensitive labels. So here we can clearly see a trend, uptrend in an upward trajectory. That it has been like imported materials and pressure sensitive labels into the USA since 2019 and 2025. There's like a little gap or like decrease in 2022, but the trajectory is clear. So now, when we see on detail these numbers and these the most important partners of USA about this type of products, we see that Mexico since 2019 and 2025 is like the most important partner, followed by China and Canada. And as we already know, USA in the last year, implemented tariffs and a really aggressive protective policies to protect its economy from foreign imports. Here we can clearly see that these tariffs had a really impact in the import materials into the USA. So here the blue line is China. So from 2024 to 2025, the Chinese imports decreased 36%. But that's not the whole story because we need to see like the other trade flows from like the other countries. So in this case, when we see the Canada imports, they increase around 94% in that same period. So at the end, so it's not really the trade flow is not disappearing. The data shows that there may be a rerouting of the trade flows of protective of all the imported materials. So that's like really interesting insight that the data shows. Now let's cross the Atlantic and see what we have in Europe. In Europe, we have the same trend of import of paper pressure sensitive labels into Europe. So since 2019, the imported labels, pressure sensitive labels, increased from 2,000 tons to nearly 9,000 tons. So that's a compound annual growth rate of around 30%. So the trend is clear. And again, let's go deep in the numbers about like the main partners. So China dominates in Europe the amount of imports that are like that enter to Europe. Around 80 in 2025, 87% of the imports that enter to Europe were Chinese. And when we see like in a big scales in a timeline from 2019 and 2025, it has increased around 482%. So that's China. But when we see another like big economy that how it's like importing, USA in this case has been always flat around 500 tons in the same period of time. So this is like the numbers of USA, Europe, and see how China is like really importing materials. But we always see and we always know that, okay, China is cheap, China labor is cheap, materials is cheap, but we really need to go deep. We really need to go beyond that. So why China wins? Because China has a structural competitive advantages when we see is like a layer ecosystem of advantages that all together give an advantage. First of all, they have like the VAT export rebate system. So they have a full 13% VAT rebate system on film label stocks and finished labels. So in this case, raw label stocks get 0% rebate, encouraging conversion activity into China. Then expedite export licensing. So in 5 years, just in simply 5 years, custom clearance time fall 92%. So think that is like an efficiency in custom clearance, it's impressive just in 5 years. So China International Trade single window process over 500 million declarations annually, and all of them paperless. And this system was introduced in 2016. So it's quite recent. The third element is like a vertically integrated clusters. So it's not just like a single factory. It's not just like a single company. We have manufacturing clusterings in Guangdong and Yangtze Delta that compress logistics costs through proximity to raw materials manufacturers, component makers, and deep water ports. So all of this creates a vertically integrated cluster that reduce logistic times and costs. The fourth element are the bonded zones and free trades. Over 100 comprehensive bonded zones offer duty-free import of raw materials for processing and re-export. So the of the Greater Bay Area system cuts logistic from 5 to 7 days to simply just 2 days. The fifth element that I have mentioned at the beginning, kinda, is the favorable text architecture. So any company that has the label of I am a high-tech enterprise status that have like a 15% of corporate income tax rate. The standard corporate income tax is 25%. So any label company that has the high-tech enterprise status, they have like a 15% of corporate income tax. Additionally to that, we have like all the research and development expenses get 200% super deduction. So it makes super cheap for the companies to innovate, to make a research, because the research like it gets like a super deduction. Complementary to that, just like each provincial has like subsidies for market exploration. So we integrate a lot of tax architecture from provincial and from like the main government. And the sixth element is those authorized economic operators that have priority clearance. Around 6,000 enterprise that are like AEO that cover about 37 of the trade volume. They receive like a favorable treatment when there's like inspection. So there's like a mutual recognition with 57 countries, including United States and USA. So they have like a really expedite and fast shipping and like low clearance when they departure from China, and also when they arrive to United States or Europe or any other partner. So they need to have this authorized economic operator. So at the end, we have all these six layers of structural advantages that all of them together create a competitive advantage for all the Chinese companies. So we have this. Now let's see to the market outlook. What does this mean for the companies in North America, Europe, and where does these companies can have like a strategic opportunity to compete or to grow? First of all, North America, yeah, they are implementing tariffs. The tariffs, yeah, are really moderating direct Chinese imports. We saw a decrease in 36% in 2025, but supply chain it's not disappearing. The imports are not disappearing. They're seeing me like a diversion through Canada. So it's really important that this year, in July, there will be negotiated the United States and Mexico and Canada agreement. So it will be pivotal to align all these tariffs to really protect the North American economy if they really want to reduce the imports of Chinese. So we keep an eye on July because there are going to be really important date as they are going to define this agreement between the three countries. That's the part of North America. In Europe, the Chinese volumes keep growing, and they will continue to grow because there are not really aggressive protective measures for imports. So there's like really an absence of trade defense measures. So this trajectory will continue. But there's a surprise that maybe it was not planned, maybe yes. PPWR and sustainability requirements are becoming like a natural barrier for all those imports that are coming from China. Because at the end, all you have all these layers of regulatory, of laws and restrictions that at the end create like a barrier if you want to import cheap and low quality materials that are not like certified. So at the end, these sustainability requirements work as an entry barrier. That's in the part of Europe. And now let's go to the strategic opportunity that we have seen with the companies and how they are really uh, like competing with the Chinese companies. So Western producers are making a difference on their products based on advanced adhesive engineering, sustainability innovation, short lead times, regulatory expertise, and integrated supply chain solutions. And one industry and one niche that has been really growing that we have seen that many companies are entering in that niche are RFID and intelligent labels, because it's in that niche that represents a high growth defensible territory against all those Chinese companies, uh, against those Chinese products that are like quite simple. So we have seen a lot of companies, big companies, investing in RFID and intelligent labels. So this is like almost the end of the presentation, and this is just like a little show of the information that you will find more details on our report on the that we have just released. So thank you so much for your attention,